Okay, again, sorry for the delay. It's a little rough getting back from vacation. This week we're going to talk about the upcoming WASDE report, what's going on with the crop, and then I've gotten a couple emails asking me to talk a little bit about tallow. So we're going to talk a little bit about tallow today as well. All right. So tomorrow, USDA will release their July WASDE crop report. And the biggest change from June to July is going to be around the acreage report that came out on the last day of June. We haven't really had a chance to talk about it, but soybean acres came in substantially below where farmers indicated they were, the acreage that farmers indicated they were going to plant in March in the prospective plantings report. That has a big impact on production. So in theory, the change, which was about a 4 million acre decrease, reduces at a trend line yield of 52 bushels per acre roughly, is about 200 million bushels of soybean production that theoretically we're not going to get because of the reduced acreage. However, we took that 200 million bushels out of our export forecast for 23-24, our US soybean export forecast, rather than our soybean crush forecast. Now, our soybean crush forecast is based a lot on what we think crushing capacity is going to be for 23-24. And ultimately, that may prove to be a bit optimistic. We started the same way in 22-23, and we've had to adjust down a little bit, not a ton, but a little bit. We probably ultimately will have to do the same thing in soybean oil. The big question mark is if we do reduce crush, it's not like we have a lot of extra soybean oil supply around, and so will that impact soybean oil used in non-biofuel or soybean used as a biofuel feedstock? Right now, we are going with the tried and true method of reducing our non-biofuel usage. It has to work one of these years. And because we've done that every year for the past 3 years, and it hasn't really happened, don't have tons and tons of confidence in that. However, we do, our model tends to predict feedstock usage a little above what gets reported. And so what will likely happen as we go through the 23-24 season, we'll shift some soybean oil usage out of biofuel and into non-biofuel. In terms of this week's WASDE report, the only significant difference we have in our old crop balance sheets is in biofuel feedstock use, where we are 700 million pounds above where USDA is. I think our forecast going forward for soybean oil might be a little bit high, but it's probably, if it is, it's probably by a couple 100 million pounds, maybe. I don't think it's by 700 million pounds, just based on where the EIA has said soybean oil usage has been over the last couple months. We're bumping up on 1 billion pounds a month, and our forecast going forward is just over 1 billion pounds a month. So it's not like we're going from 900 million pounds to 1.5 billion pounds a month. I think by the end of the year, we might have it at 1.2 billion pounds a month or something like that, which again, that might be a little high. But I think USDA is probably going to have to come up some, and we probably are going to come down some and meet in the middle somewhere. Outside of that, the only other change that I think that they will make is they probably will cut their export forecast a little bit. We're 125 million pounds below them. It's not going to make a huge difference one way or the other to the balance sheet. I suppose it could potentially, if USDA didn't change anything else, theoretically that could put their ending stocks forecast above 2 billion pounds for 22-23, I think that would be a pretty big surprise. I mean, they're not that far off 2 billion pounds now, but like a lot of things, that's a psychologically important level if it's not that important relative to their current forecast. But outside of that, I don't know that they're going to make big changes to 22-23. What I suspect that they'll do in 23-24 is they probably will split the implied reduction in soybean production between crush and U.S. exports, and then reduce their non-biofuel use, I'm guessing, maybe, and their soybean oil used in biodiesel forecast, biomass-based diesel forecast. So they probably will try and minimize the impact that the reduction in the crop has on the soybean oil balance sheet, not as their primary goal, but just as a result of the fact that demand for soybean oil is really strong, and you don't really want to cut either of those things really at the end of the day. Okay, so this is a little old since we didn't meet last week, but I still wanted to go through a little bit of the acreage stuff. You can see here the change from Prospective Planning's to USDA's acreage report back to 1980. The 6.1 million acre difference in corn and soybean combined was the largest difference, where one went down and the other went up. Since at least 1980, you can see in 1983, there were really big reductions. But outside of that, this year's change was pretty significant and it really surprised the market. So soybeans went up to 85 cents, I think, on June 30th, and they've backed off a little bit since then, in part because we've seen better crop growing conditions that have led to a modest improvement in condition ratings for this past week. They quit falling and went up to 51%. However, there's only 1 year since 2000 that the condition ratings have been lower, and that was in 2012. If you don't remember, there was a drought in 2012. Like, it just didn't rain in July. Soybean prices peaked at their all-time high that summer, and then started to fall in August as rain started to materialize sort of later in the summer. And while production was way down, it wasn't down as much as people had feared in the middle of July. I don't think that this year is going to look like 2012 in any shape or form. We've gotten decent rainfall over the past couple of weeks, as evidenced by the improvement in condition ratings. And there still is timely rainfall forecast for July. More importantly, temperatures don't look like they're going to be extraordinarily hot. It's important for soybeans and it's important for corn pollination. It looks like corn is going to get through pollination without any significant issues, and that also suggests that soybeans probably will develop pretty close to normally as long as the rains develop as forecast, at least through the middle or latter half of the middle of July. So at this point, despite the fact that crop condition ratings are down, I haven't really changed my soybean yield forecast. I could certainly argue, I think that soybean yields will be a little bit lower, but I also think that, at least in my mind, and I've talked to several people about this, the production in Brazil and the yields in Brazil, particularly in Mato Grosso, were a big leap forward. And traditionally, I think or at least it's my impression that they were a big leap forward. I honestly haven't looked at the exact yields, but given that they lost Rio Grande do Sul basically and still produced a record crop that was significantly bigger than the old record, it seems like we're at a point where yields are taking another step up. So yields tend to change in a step function where they take a big step up and then they're kind of flat for a while and then they take a big step up. Typically, this step is associated with a significant improvement in technology or farming practices. So the introduction of fertilizer and GMO seeds, those were both obvious big steps up in yield. This one is the technology change is not quite so obvious. I think there are several things that are kind of coming together. One is an improvement in the seed technology. Two is just a continued improvement in farming practices. And so I think that while 52 and a half is sort of the trend line yield for soybeans, I think there's a good chance that under ideal conditions, you would get yields that were significantly higher. And so while I'm not cutting 52 and a half, it does feel like it's maybe a little bit lower than I would be if conditions were just absolutely had been perfect all growing season. Ultimately, we'll see if that's true or if production in Brazil was just kind of the perfect set of conditions coming together to boost that crop in those areas. If it is a big step up, it only adds to the potential bearish outlook over the next couple of years. If the US crop yields 48 or something like that, then I think I probably will throttle my my expectations for yield for both the US and South America. That doesn't necessarily mean that I will be really bullish soybeans, because I still think that South America is going to grow another huge crop next year. And it's very hard for me to see, without a significant reduction in US production, how soybean prices remain up at $13 or $14, given a 165 million ton Brazilian crop and a 50 million ton Argentinian crop next year. On to canola. So the change in US acreage in canola was, let me just go forward here for a second. I guess I should have put these first. So you can see that US canola acreage really jumped up in 18 and 19 and then dropped back down and has kind of proceeded along sort of the longer term trend of slower growth. But we got a year-over-year increase, and that was a little unusual in oilseeds this year. So if you look at the total oilseed acreage this year versus last year, what you saw is about a 7 million acre decline in total oilseed. Most of that was from soybeans, and small increases in canola oil or canola and sunflower and some of the other minor seeds helped offset a bit of the decrease in soybeans. But there were some other oil seeds, minor oil seeds, that also saw decreases in planted area. I think that farmers generally can see what every analyst sees, which is that we're about to face a wall of oilseed supply. And while vegetable oil demand is really, really strong, meal demand has been really strong. But given the decreases in cattle, and not that cattle eat a lot of soybean meal, but also hogs, the outlook for soybean meal prices is not so strong. And that has a bigger impact on the value of soybeans than soybean oil. Now, the doubling of soybean oil has obviously more than offset any decrease in soybean meal, and soybean meal prices haven't really decreased. But to keep crush margins high. However, like I said, I think everybody is just kind of looking forward to South America and the next crop. And I think that's a big reason why farmers didn't plant as much, didn't plant the soybean area that they intended. The other reason is that, and there are some of these things that people say that are a little cliche and rules of thumb that are really true, sometimes I forget them. And one of those is that farmers love to plant corn. And this year was certainly a year that reflected that. Farmers planted a lot more corn than they intended. When conditions are good, generally you get more corn acres than farmers say they're going to plant in March. And this year was no exception to the extreme. Okay, so in canola oil, I think the biggest change here probably is going to be in biofuel use. USDA had data through March, in June. They don't typically make a ton of changes to the June balance sheet, so I think they probably will make some changes this month. Now, they raised their 22-23 canola oil used in biodiesel or biomass-based diesel production pretty significantly in May. And I think that they probably will raise it a little bit again this month. Next year, we still have canola oil use a little bit stronger than this year and stronger than USDA. The key to next year really will be the spread between canola oil and soybean oil. If the spread remains close to where it is, which is at the lower end of the historical range, then I think that you probably will see a decrease in canola oil, or I'm sorry, you will see canola oil continue to be used at about the same rate that it's used now, or grow a little bit naturally with biomass-based diesel production, renewable diesel production, really. If the spread widens back out, then I think you'll start to see if not a decrease, just a tapering in growth down to just 1% or 2%, or maybe even kind of flat year over year, maybe modestly a little bit lower year over year. The other big difference between where we are and where USDA is on canola oil imports. And it is, as I was going through and doing this morning, the amount of, and we'll get to this in a couple minutes, the amount of canola oil that Canada is going to export this year and in next year is relatively steady, and US imports are growing. And we've talked about this before about US imports coming from Australia and other sources, and whether that can actually continue in the long term. So right now we're kind of banking on those sources continuing to ship a significant amount of soybean oil to the US. And if you look at monthly imports over the last, or during the 22-23 marketing year, in 4 of the last 6 months, we've imported more than 500 million pounds of canola oil. This year is the first time we've gone over 500 million pounds, and we've done it for, I think, 3 straight months. And so there is a big draw for canola oil in the US, like there is for a lot of stuff. One of the things that I looked at the other day is US fat and grease imports. And we have gone from sort of a net exporter of fats and greases a couple of years ago to now a significant net importer. And so there's all of this pressure to import feedstocks, essentially. And I think canola oil, given the amount that it's used or the growth in its use in 2023, I think that we probably are going to continue to draw more canola oil from these countries that haven't traditionally been sources for the US. Now, of course, a lot of that will depend on whether their crop yields are at trend line, or whether they fall below that, whether the supply is actually available. But I think that this is probably one of the significant changes in world vegetable oil trade flows, is more canola oil into the US. And so we're kind of sticking with our import forecast based on 2 things. One, the assumptions that we make to get to the numbers aren't really that crazy on how much canola oil do we need from countries that aren't called Canada. And the other is that we've gone to using canola oil as the marginal feedstock. And so to balance all of the feedstock demand, essentially what I do is I just add to canola imports. Well, I want to say Canada there. So it works in my balance sheets. Whether that ultimately is reflected in reality or not, again, I think depends a lot on the crops in Australia or whatever country. But again, I don't, if you look at the difference between sort of the implied exports from Canada to the US and US imports, while this year there's a big step up in that difference because we've started to import a lot from other countries, next year we don't assume another doubling in that number. We assume a modest increase in both shipments from Canada and shipments from other countries. Whether Canada will have all of the supplies that it has currently to ship out remains to kind of be seen. Canada is also building up its canola crush capacity a little bit, but they're also increasing their biofuel production a little bit. And so I think there will be a question about how much of Canadian supply gets exported and then how much of that comes to the US. I would assume, again, that the vast majority of it will come to the US because the benefit that sort of falls downhill from the tax credits for biofuel production, raising all veg oil prices. But again, we will see. So the Statistics Canada released their acreage estimates the day before USDA did, and you can see that Canadian canola acres grew a little bit in 2023, and that combined with a recovery in yields closer to the long-term trend line implies about a 2 million ton increase in canola production in Canada. And based on the trends that we've seen over the last couple of years, we allocate a bunch of that increase to increased crush. And again, based on a bit on our assumption of Canadian crushing capacity, and then increase exports with sort of the rest of the increase in supply. Canadian canola exports the last couple of months have kind of fallen a bit below the 5-year average. And so it does seem like there still is this preference to crush over export. The seed, I think most countries would prefer to crush and then either export the products or consume one of the products domestically and export the other, that kind of thing, to increase the value added from their crush and their crop. So we have again sort of leaned heavily on crush in the expansion as opposed to in the expanded supply, as opposed to increasing exports significantly. The one country that really can change that is China. China typically imports a fair amount of canola from Canada. If China steps in and buys a lot of canola, then our export number may be a bit low, but I tend to think that the ag companies, the crushing companies, will again prefer to crush as opposed to export. In terms of changes to the Canadian balance sheet from this month's report, I think USDA needs to make a cut in its forecast for 22-23 exports. And that is about it. I don't know that, I think our crush forecast is okay. And we're not that far away from USDA. I think if they make some changes to 23-24, I don't know that they will increase their crush up towards us, but they may increase it a little bit, just depending on where they end up with supply. The one thing that I think that they probably sort of need to change, not super dramatically, but is their carryout forecast. So 1.3 million tons feels a little heavy. We're not super far away from that. We're a little below that, but that would allow them to potentially increase if they decrease that, they could potentially increase their crush or their exports or both. But I don't know that they will change their carry out at this point in the season unless there's an adjustment in their acreage forecast or in their production forecast. And mostly here, I just wanted to show that we're kind of taking yields back up towards where they have been. I don't know, and I think it's really hard to judge based on the last couple of years whether we've had a similar improvement in canola seed technology that I think we've had in soybean seed technology. Last year was a big improvement over the prior year, but the prior year was a drought. And you can see kind of the 4 years before that, yields were just kind of flat. So it could be that if conditions in canola growing areas this year are really supportive, we might get surprised and come up with a yield that looks closer to 2.5 than it does 2. I think it's just a little early to tell, and we don't really have, in the same way that we had Brazil and South America, to kind of say like, hey, maybe trendline yields are higher than you think. We haven't really had that in canola. And maybe you could make the argument that that the Australian crop was a sign of that, but I think the Australian crop had really good growing conditions. So I'm not sure that that is the same. That's sort of equal to what we saw in Brazilian soybean production this year. On the canola supply and demand, I don't think that USDA will make a lot of changes to this number, only because I think if they were going to change something, it probably would be domestic use, and they probably would cut it. But I think to do that, I think they would need to change their crush forecast probably. I don't know that they would. They might, but I don't know that they would just change their domestic use forecast without an offsetting change in supply, given where their ending stocks number is already, and given what they expect for ending stocks in 23-24. So I think they're a bit high on domestic use this year, and then I think they're a bit low next year. They've got almost no growth built in for domestic use from 22-23 to 23-24, given the startup of credit trading in Canada this fall. I think that we've got about an increase of about 430,000 tons of domestic use based on biomass-based diesel production, primarily biodiesel production in Canada. And so that's why we go from sort of below them to above them. Now, if you just subtract out that 430 from our forecast of 1.6, essentially, it still takes us from 873 to 1.2 for increase in non-biofuel use. And that might be a little bit too optimistic. I think that part of the reason I haven't really cut that a little bit more is that the biofuel portion of domestic use, I'm still kind of getting a feel for. And we've gotten, I don't know, maybe 2 years of data, maybe a little bit more than 2 years of data from Stats Canada on biofuel feedstock use in Canada. And so I think we're starting to get a better feel for it, but given the anticipated change in the market due to the establishment and trading of credits, then I think that you could have a change in biomass-based diesel production in Canada that doesn't exactly 100% line up with where we've been in the past, or the production trends that we've seen in the past. So I've got a little extra buffer in there. If domestic use isn't as strong, all it does is increase the supply that's available for exports, assuming crush is unchanged. And honestly, I will take any additional exportable supply that I can get out of Canada or anywhere, really, given the growth that we have built into our balance sheets. For Canadian canola oil exports, you can see over the last couple of months, they've actually dropped down below the 5-year average. We've got them bouncing back the next couple of months, but typically the last 2 months of the marketing year aren't necessarily stronger than sort of April and May, and so, or April anyway. And so again, this might be a little optimistic, but I do think that the strength that we've seen in US canola oil demand from renewable diesel producers suggests that imports won't necessarily follow the same trend that they followed the last couple of years. We've gone from using sort of 130 million pounds roughly a month of canola oil and biodiesel production to 250 or 260, so basically doubling the monthly demand for canola oil for biomass-based diesel production. And we just don't produce enough canola oil, given the much larger demand from non-biofuel end users to satisfy both the biofuel and the non-biofuel requirements. And so I think that demand pull is still going to be there, and I think exports probably will be a little bit stronger in the coming months, especially given the cut in U.S. soybean acres and the potential reduction in supply in soybean oil. If I were sitting on a desk at a renewable diesel producer and canola oil worked for me, I would probably try to source as much of that as I could here. If not for sort of this year's use, I would try and at least get start to get some lined up for next year when the soybean crop is smaller, and maybe start to make those connections now and start to buy a little bit now. And so that's kind of how I think that exports will potentially outperform over the next couple of months. We shall see. In Malaysian palm oil, a couple of weeks ago when July did his presentation, we talked about how we were projecting a significant increase in ending stocks, and we weren't 100% sure that that projection was ultimately going to be realized, in part because it was just such a big change from where we've been the last couple of months. 3 million tons, we were above 3 million tons on ending stocks, and that is a level that is relatively high, especially over the past several years in palm oil. And so it seemed that was what we needed to do to make the balance sheet work at that point, in sort of our best thinking at that point. But we did recognize that potentially we were going to end up with lower ending stocks than we were talking about at that point. And sure enough, the Malaysian Palm Oil Board report came out. We'll go through that in just a minute, but came out and featured smaller than expected ending stocks. And if you look at production and exports, ultimately the changes that we made cut our forecast for ending stocks in both 22-23 and 23-24 pretty significantly. Domestic use was much stronger than we expected, and exports were stronger than we expected in May. And as a result, we ended up raising our export forecast and our domestic use forecast. Now our domestic use forecast is closer to where USDA is. Not that anybody really pays super close attention to what USDA says about palm oil, but if you think about it, USDA really does take a holistic approach to vegetable oils. And so while we all really look at the Malaysian Palm Oil Board data, in terms of the Malaysian Palm Oil Board basically looks at Malaysian palm oil, USDA looks at everything, and kind of fitting palm oil in with everything else, there's some value to what USDA does from kind of a whole veg oil supply and demand situation, I guess. That said, I don't know that I think that they're going to make any big changes in their forecasts this month. If they did, I would suspect that they probably would cut their 22-23 production and then offset that with a modest decrease in their prediction for the 22-23 ending stocks that would then sort of carry through into 23-24, and I'll be real surprised if they make any changes in 23-24. All right, the Malaysian Palm Oil Board report came out. You can see that we were a little high on production. We were relatively low on our expectation for exports relative to where the market thought it was going to be, and ultimately what the MPOB reported. The result of all of that was a carryout or ending stocks that were just over 2 million tons, or I'm sorry, we expected over 2 million tons, and they came in at 1.7. And so that really was the reason for a lot of the changes that we made this week. Like I said, we kind of took our export forecast up a bit, and then we also took our domestic use forecast up. The big question on domestic use is whether the growth in non-biofuel is actually sort of real. So if you look at, our non-biofuel use forecast, we are at sort of 1.2 million tons in 22-23. If you just take 255 and subtract it from 3793, and that is up from 850,000 ish tons in 21-22, and a 50% growth in non-biofuel use is something that doesn't really happen too often. So we're a little not 100% confident in that number. However, if you look at the monthly implied domestic use in Malaysia, that number is sort of what it takes for domestic use not to just fall off a cliff in the last 3 months of the marketing year. And so it does seem like it's going to happen in 22-23 anyway. And then the question is, what do we do kind of in 23-24? And so in 23-24, we've got a slight decrease in overall domestic use, slight increase in use in biodiesel production that ends up cutting non-biofuel to about 1 million tons, which based on the trend wouldn't be, if we were at 1 million tons in 22-23, I would feel a lot more comfortable with that number than I do with sort of the 1.2 million ton number. So in 23-24, to start at 1 million tons for domestic use, non-biofuel domestic use, kind of makes sense, both from a this is what it takes to make the numbers work perspective, but also from, if you look at the trend in non-biofuel use, that's a little bit high, but relatively close to where we would be if we just sort of drew a straight line through a chart, a scatter chart of where domestic non-biodiesel use has been over the last couple of years. Outside of the surprise in exports and the ending stocks number, the Malaysian Palm Oil Board report really kind of, I think, beyond smashing down our expectations that stocks were going to grow over 3 million tons next year, it kind of also, I think, caught a bit of the veg oil market, not just palm oil, but also soybean oil. So palm oil was up about 2% yesterday after the data came out, a little bit more than I think. And soybean oil went up about 2 cents almost. Part of that was big gains in soybean futures. But part of it is this idea that maybe world veg oil demand is starting to rebound a little bit, and veg oil supplies are going to remain constricted because the US is not an exporter of vegetable oils anymore, and in fact is a fairly significant importer of all things that are biofuel feedstocks. And so I think that that while I still expect soybean prices to weigh on soybean oil and then all of the other feedstocks down the line, I think that that relationship probably becomes a little more and more stressed, and there is the potential that if we don't finish out, or let's say we finish the US growing season out with a yield that's below 50 bushels an acre, at that point, you're almost gonna need to, you almost have to start cutting your crush forecast and reduce your soybean oil supply. And that would obviously provide a lot of support for soybean oil prices, given the demand in the US. It would also suggest, I think, to the world that the US is going to probably import more vegetable oil, and it will start to tip the world vegetable oil balance back a little bit towards the tightness that we saw in 2021 and 21-22, when even just sort of the idea that eventually we were going to use a lot of soybean oil lifted soybean oil prices up to record highs. Now, I think there is always a speculative, there's a lot of speculative interest in big theme trades like biofuels in soybean oil. And so even if the US soybean yield is below 50 bushels an acre and we get the support in soybean oil prices, I wouldn't necessarily expect that soybean oil futures would go back to those record highs, because on some level, yeah, the price rose so much and the fundamentals didn't really support it. Now we have the fundamentals that would support not those prices, but certainly big gains in soybean oil. But the speculative interest is kind of past. And so the good part about that is that prices more accurately reflect the supply and demand. And I think that even while they're well supported, again, I don't necessarily think that we run back up to those record highs unless the US crop is really significantly smaller than people expect, and we really start to have to cut into US crush, which again, I will favor cutting soybean exports over cutting crush in the US and similarly in Canada. However, at some point there will come a time when we will need to cut the US crush, because China is one of the biggest customers for US soybeans, and they have some level of demand that they essentially split between the US and Brazil. They can certainly take more soybeans from Brazil, especially if they grow a big crop next year, and that may help them reduce their US exports. But taking US exports to zero almost is not really an option for China. And so there's always going to be some base level of US exports. And if we start to bump up against that level, and I think that level is probably a long ways off from where our expectation today, but if we start to bump up against that level, then we would obviously need to cut our crush forecast, and would cut our crush forecast well before we got to that level, because China isn't the only country that buys soybeans from the US. So you can see here, this just kind of shows our expectation for stocks and for exports for the rest of the year. We kind of are very much in line with where we've been sort of the last couple of years. Stocks are building a little bit, but not nearly, like I said, what we expected a couple of weeks ago before the MPOB report. I still do think that the domestic usage question is one that could bump our ending stocks expectation up a little bit. but it wouldn't go back up to 3 million tons. It would go from, we're around 2.1 million tons now, up maybe to 2.3, 2.4, I think, in the extreme. But I don't know that we're really going to get significantly above 2 million tons, particularly if we see sort of conditions in the US deteriorate again. If the trend starts to change again, then I think you will start to see buyers kind of around the world start to substitute a little bit more palm oil in for soybean oil. Okay, on to tallow. So if you look at tallow prices over the last several months, you've seen that basically the inedible tallows bottomed kind of in late March, early April, I think, or was it late April, early May? Sorry, late April, early May, maybe. And what happened was, as those started to rise, then they narrowed the spread between inedible tallow and edible tallow, or technical tallow, and those started to those prices have started to bounce off their lows in the last couple of weeks as well. And I think that given what we're seeing in both production and imports, at least in May, it could be that tallow prices relative to other feedstocks are going to rise a little bit more, because the production number that we saw in May, while it was up from April, is certainly well below the level that we saw earlier in the year. And if you look at sort of the implied yield, so there's a couple ways we look at yield. One is as a percent of beef production, commercial beef production. And so we say 14.5% of commercial beef production is represented by tallow production in the month. And then we also look at it on a per head basis. And if you look at the tallow yields over the last month and over the last couple of months, now last month was marketing year low on both sides, and over the last couple of months they've been trending lower. Our forecast for 22-23 production is based on yields that are a bit higher than what we saw in April and May. And if you look at it on a per head basis, I think, if I'm doing the math correctly, and there's every chance that I'm not, it looks like we get 100 pounds of tallow, 120 pounds of tallow per cow slaughtered. That seems high to me, but I don't know how to do the math. And anyway, it's whether that is absolutely the right number or not. The purposes of the illustration is, for every pound that yield declines, our production forecast declines by 400 million pounds over the balance of the year. So if the average yield over the next 4 months is a pound below where we expect it to be, then our production forecast will drop by 400 million pounds. And the yield in May was like 117, and our forecast for the rest of the year is around 123. So while it seems odd and probably is exaggerated on some level, if that average yield is closer to 120 pounds than it is 123, then our production forecast drops by almost 1 billion pounds. Again, I don't think that will happen, and I've got to go back through this, because changes like that, like 1 billion pound, a 25% change in the forecast in the last 4 months of the year, 4 months is a long time, but that seems a little large to me. And given the range that we've seen in yields, primarily in May. So before May, yields were relatively steady. We didn't see a drop from 123 to 117. That still seems, even with that, that seems a little excessive. But I think the risk is there. And I think that we've had a couple of questions about our tallow production forecast based on the idea that that the cattle numbers are coming down. And if you just look at sort of production through March, and then you look at production in April and May, I think that would suggest that tallow production probably is going to slow over the balance of the year. Maybe there's a big reason why tallow production is down in those months. There's a seasonal reason, and if you look at the 5-year average, it does kind of match with that. But I still think that there probably is at least some risk for even 200 million pounds would be a fairly significant loss of production from our forecast for 22-23 currently. So again, somebody that works in the tallow market may listen to what I say and say 123 pounds is ridiculous. That's way too much. That may actually be true. I'm just looking at numbers on a spreadsheet. But I think that the more important message is that we've seen a shift down in yields, we've seen a shift down in production, and that potentially is going to limit supply in one of the most often used feedstocks for biofuel production, particularly for renewable diesel. We've seen and expect that biofuel use is going to grow by 50% in 22-23 from 21-22. And if you look at the change in data that's been reported for 2023, it doesn't seem like it's a huge stretch or that our forecast is way off base here. So I think that we have come to rely a lot more on imports, and our imports are growing about as quickly as our biofuel use. So I think we actually are projecting imports grow by sort of 52% from 21-22 to, or from 21-22 to 22-23. That's just a coincidence. We didn't just say, oh, well, that's 52%. We've got that. The scale of the numbers are different anyway. And so if production slows, then that will make the market much more reliant on imports. Unfortunately, I hope I have this here. Unfortunately, imports have also slowed. And I thought that I put a chart for imports in here, but I guess I didn't. If you look at imports over the last couple of months, they have also fallen below the 5-year average. I think that probably was more a function of those imports are showing up after they were probably purchased in January or February, and by the time that they got here from New Zealand or Australia on some level, that's the volume, that's sort of the time frame for the volume. So given what we saw prices doing in that time frame, it makes sense that imports might be a little bit slower now. The key question will be whether going forward they're going to remain at the level of the past couple of months, or they're going to resume sort of the growth that we saw over the last couple of years. Basically, we cut our forecast for imports a little bit this month, but I won't necessarily be surprised if in a month's time, once we get import data for June, if I don't go back and raise that a little bit. We didn't cut our import forecast by that much. I think it was 160 million pounds or something like that. But it wouldn't necessarily surprise me if the decline that we saw in imports here recently was a bit of a function of pricing earlier in the year, and now with prices on the rise again, that we won't necessarily see a bounce back in imports, which will absolutely need to offset whatever decrease we're going to get out of production. One of the more surprising things about tallow, I think, has been really the strength of non-biofuel demand. You can see earlier in the year, it was really kind of at record levels. The last couple of months, however, with the decline in production and the decline in imports, non-biofuel demand has also slowed. We don't have biofuel feedstock data for May, and so that number could move a little bit by the time that we get the biofuel feedstock data at the end of this month. But I think that if you're going to reduce production and you're going to produce imports, then the question becomes, what does non-biofuel do? Biofuel definitely loves tallow. And we've talked a bit in the past about the difference between the cost structure for biofuel producers and non-biofuel producers, where for biofuel producers, feedstocks are the vast majority of their cost structure. For a lot of non-biofuel end users, that's not necessarily the case. And so far, the way that what that has meant is been that non-biofuel use is much stickier than anyone would suggest based on just looking at what was going to happen with biofuel feedstock demand. You would take biofuel feedstock demand way up, and just naturally you would reduce non-biofuel demand. And the reality has been that biofuel feedstock demand has gone way up. Non-biofuel demand has continued to grow slowly, and imports or other supply has grown. Now, if that supply doesn't continue to hold at those levels or contracts, then which one is going to give up? Again, I would mostly favor biofuel in this case, because the production and use is mandated by law. But the cost structure is something that obviously has had an impact on non-biofuel usage and helped it to remain as robust as it has been, despite the fact that prices have risen so much over the past year. I think one of the non-ag keys to non-biofuel use for all feedstocks and veg oils going forward is the economic growth in the U.S. So the sort of GDP Now tracker and our internal GDP forecast both suggest a slowdown over the next couple of quarters into a recession, potentially a mild recession, or maybe a little bit stronger than a mild recession. And that potentially could have a bigger impact on non-biofuel demand than the strength of prices that we've seen over the past couple of years, or the growth in biomass-based diesel feedstock demand. I'm sure that just about the time that I come around to keeping non-biofuel demand strong and growing going forward will be the time that it actually does finally start to slow. I don't think that really is going to happen in a significant way, because a lot of the non-biofuel demand is stuff that we use all the time. I mean, for soybean oil, it's easy to think of salad dressing or mayonnaise as non-biofuel demand uses, but a lot of this stuff is used in chemical, in the oleochemical industry, and it is just in just about everything that you can imagine, or everything that you use probably uses some amount of vegetable oils, fats, or greases. So they tend to be a relatively good leading economic indicator, but they also tend to be, the usage tends to be a little bit more sensitive to economic growth than we see in some of the raw commodities, I guess, for lack of a better way to put it, corn and soybeans, for example. So we shall see. Historically, non-biofuel demand should rise pretty strongly over the next couple months, July, August, Sep. I don't know that the supply is going to be there to support that kind of increase from sort of the July doldrums up into the end of the year, or the end of the marketing year anyway. All of that suggests that tallow prices are probably going to continue to move higher. And when I ever finally get to post a report, which hopefully will be this week, then I think what you'll see is our forecast is higher, not necessarily aggressively higher. And it may be that that tallow is the one sort of not exception, but tallow, the growth in tallow prices is a little bit stronger than the growth in other feedstocks, in part because of the declines that we're seeing in production and potentially imports. And if that's the case, then if you looked at the spread between tallow and soybean oil, or tallow in any of the other fats and greases, my guess would be that tallow prices probably would rise a little bit more than anything else. And if we have a problem with the soybean crop, then I think tallow prices could really accelerate again, especially if we don't get sort of the imports that we have gotten over the past couple of years, or that growth stalls. We really need imports to kind of continue to grow at the same rate they have been. And it looks more likely that, or at least over the past couple of months, imports have kind of stalled at the elevated level that they grew to effectively. All right. That is it for this week. I appreciate everybody coming out, and I hope to see everybody next week. Next week, we are going to talk a little bit about South America, and something that we kind of looked into this week about South American crush, and whether Brazilian crush is really going to step up and replace all of the soybean complex products that we're not necessarily getting out of Argentina this year, and the impact that that's going to have on world vegetable oil prices and the US supply and demand. All right, thanks everybody. I hope everybody had a good 4th, and I will see you next week.